The white line is the pivot. What that is the high-low close divided by 3 of the previous day. It's basically the average price of the previous day. And the general rule of thumb is when you're above the white pivot area, you want to go long, and when you're below the white line, you want to go short. You want to look for shorts. Because if the market's underneath the average price of the previous day, it's likely to go down. If it's above the white line and above the average price of the previous day, it's likely to go up. That's one rule that most pivot traders use. Because so many traders use the pivots, they also make tremendous support and resistance areas. Notice how this midpoint, this is halfway between the pivot and resistance point 1, which you can't see on the chart. The market opens up and is relatively weak and can't get over this midpoint. Normally you would expect the market to find support right here at the pivot. It pretty much chews right through that and goes right down to the first support level. Now once that's happened, you want to trade on the short side, so you want to wait for the market to retrace back up to the pivot or another resistance level and get short. And so you get short right here, and the market comes back down and goes right through this level. This is right during a news time, and your next profit target is either the midpoint between support 1 and support 2 or the second support level, which is exactly where the market went to before stalling and finding support. Let's look at another example. Here's the next day. You can see the market was already in a downtrend. It's consolidating here sideways, and it finds support at this first midpoint, which is also, the low of this little range it's in. And once the market breaks down this level, it finds a little bit of support here. It gets a little bit of a bounce. These are 15-minute bars, and then breaks down and goes down to the next midpoint level. And look, almost to the pip, this pivot level is a support area. So if you're looking to find areas to trade counter trend, the pivot zones are wonderful areas to get into relatively low risk trades. You can see the market finds support here and bounces, comes back down again and bounces. This is a 20 pip move, 20 pip move, and it's just consolidating here. Goes down to the next pivot area and finds some more support. As you can see, the next day it goes over the pivot area. One would expect the market to go up to the pivot. That's what typically happens. When the markets have been in a downtrend for 2 days, they're likely to make a run up to the previous day's average price. And when that does not happen, it gives you a very big clue that the market's likely to go down. And as you can see, the market's kind of consolidating here at the midpoint. And once this level gets broken, it's a very safe short to get into, and this is your first profit target, and here's your second profit target. And you can see the market just kind of chops around at that second profit target down there. Let's go back in time and look at some more examples. Now here you can see the market opens up underneath the pivot, breaks out above the pivot, goes right to the first midpoint level, which is resistance level, almost to the pip. It's perfect resistance. Market comes back down and is consolidating. Once it breaks down through the pivot here, you would expect it to go to the midpoint or the first support level. And the market goes right to the first support level and finds perfect support right there. You can get in at this level and buy, or wait for a double bottom, which is safer, and buy, and use the midpoint or the pivot as your profit target. Let's scroll into the future and see what happens. Market goes right back up to the pivot. That's a nice 40 pip move you got off of buying the first support level. And the next day, because the market rallied, found support, didn't even go to the second support level, and broke back and closed the day above the pivot, the next day the market's likely to go up. You can see that the pivot's down here. Our rule of thumb is we want to go long when the market's above the pivot. And so that's exactly what happens. Look, it goes up, finds resistance right at the second resistance level. This is resistance level 1, which it finds support on, and it breaks out. This is a pretty safe place to buy right here. And this is your profit target. You scroll into the future, you can see this midpoint here acts as support, and as long as the market's above this midpoint right here, you're looking for the market to try to go higher. Once this midpoint here gets broken, you're looking to short. Watch what happens. You go short right here, and you can see the market pulls back down. Here's your first profit target. You might consider getting out at the midpoint here, where the market may pull back to the pivot. Look, it pulls right back to the pivot, within a pip or two. And if you would have got short up here at 45, you made about 35 pips on that short. So now we're in a little consolidation zone. If it goes above this first resistance level, look for the market to go to here or here. And if the market breaks underneath the pivot, we want to go short. It holds resistance here. Found resistance here the first time and then the second time. So if we break the pivot, we're likely to go lower. Okay, so we go short. And this is one of those things where if you go short and the market immediately comes back up above the pivot, you get out of your short with a tiny loss. That's what's nice about the pivot trading system. When you're right, you make a lot of pips, and when you're wrong, you can lose 5 or 10 pips max. You never want to lose more than 10 pips trading this method. And so the market, goes up the next day. Here's the pivot. It's likely to find resistance here and come down, but if it doesn't, we want to go long. And you can see, look, the market found resistance here, pulled back 10 pips. You could have made 10 pips the first time. And if it can't go back down to this midpoint level here, it's likely to break out above this level, and we want to go long when it breaks above 31.30. Look, so here we go long, 31.30, and the market shoots up, and you can see it shot up about 20 pips. We just made 20 pips there. And it broke out above the next resistance level. It's likely to go the next, and it does. If you got out of your trade here and bought this pullback here, you could have exited here again, or once it broke that level, looked to get out of your trade right here at the next resistance level. And this market's very strong, goes up to the next midpoint and kind of stalls. The markets oftentimes either touch these levels or they go, they're so volatile they go a little bit through it but then consolidate. So basically, if you wanted to short this market, this is a resistance area. Once the market goes underneath 31.80, you can get short with a profit target of here or back at the pivot. And you can see, look what happens to the pivot. The pivot acts as support. You can buy this area because most traders who use and trade off the pivots look to buy right at the pivot. The pivot is the most powerful of all these levels. And you can see the market finds support here and immediately goes back up 40 pips in a very short amount of time. Very low risk, safe place to buy. Now it's finding resistance here. You can go short once it breaks the low of this little consolidation area. With anticipation, it'll go back to the pivot. And look what happens. The market's not weak enough to go back down this much. That's your first clue that it might go higher. If it breaks above 31.50, we want to go long again. Next day opens above the pivot, so we want to go long. You can see it tries to go higher and fails, comes back down. We want to basically buy the first time it touches the pivot. So the market pulls back. We get in right here at 31.50 because the market the previous day was above the pivot. It's above the pivot today. The trend's up. We're buying dips to the pivot in anticipation that the uptrend's going to continue. And that's exactly what happens. We just see a 30 pip up move here. You could get out right here at the midpoint or hold on to the next resistance level. In this case, we just made it close to 50 pips. And you can see the market kind of stalls here. If it breaks out above this level, it's likely to go to the next resistance level. Lots of chop around that area, and it really couldn't break out.